What's up, everybody? Devin James here. Super excited for our conversation today. 3 simple items. What's going on at a national level? The economy, unemployment, interest rates, inventory, home prices overall. Number 2, we're going to cover the state level. How does that apply to Arizona, Phoenix? What's going on in our local real estate market? And finally, number 3, we're going to leave with my forecasts for 2021. So a lot has happened, guys, over the course of 2020. We're not out of the woods yet on the unemployment side of things. So let's take a look at some of the specifics. Currently at 6.3%. This is BLS data, by the way. Currently at 6.3%, about 10 million folks are unemployed across the country. What that number does not include are folks that have stopped looking for a job over 4 weeks. So they said, for whatever reason, I'm not actively looking for another role. Now, this is a big indicator for me because these folks were in a pandemic, right? So maybe these folks are worried to get another gig, to be exposed to COVID and things like this. So this number is quite high. We're talking about 7 million that aren't included in the 10 million number. Now, this could be due to a couple reasons, but one of the big clear ones is we're in a pandemic. So a lot of people are scared, a lot of people are nervous, and they might not actively be looking for another role, but need another role, right? And they're waiting for vaccine pandemic to go back to revert to normal. That's 7 million people. That is about 4.2% of the labor force. Another item to keep in mind is the folks that were full-time and shifted to part-time due to economic reasons, due to lockdowns, right? And this number is about 6 million, or 3.6% of the overall labor force. One of the main reasons housing prices have been so high over 2020 is because of inventory. People have been very reluctant to put their homes on the market. National inventory levels are at 1.9 months of supply, which is very low in relative terms. It does depend on property type. Typically, your starter home is what's flying off the market right now. I would say that number nationally is a bit lower than the 1.9 number versus the $1 million plus homes. Those typically have months of supply that are much higher than that. 2020, we had a booming year for volume, record sales. In fact, in 2020, we seen the most housing sales since we did in 2006. What was 2006, guys? 2006 was the height of the last housing bubble. So, are we in a housing bubble? It depends on who you ask. If you ask the Case-Shiller Home Price Index, then the answer to that question would be yes. We are 100% in a housing bubble. The question is, when does the bubble burst? That's what nobody can really quite put their finger on. Is it 2021? I think the answer to that is no. Go ahead and take a look at the chart here. This is the Case-Shiller Home Price Index relative to the Consumer Price Index. There is a great relationship between these that we can track to get a real inflation adjusted value here. And I think you can very clearly see the story here, guys. In 2006 was our last peak in the housing bubble here. And look at where we're at right now in 2020 and 2021. We are almost at the height of where we were at in 2006. Now, no telling where this goes. Does it keep going for several years? Does it bust? Does it fall to the bottom? Does the government just spin till infinity and beyond and we don't have to worry about this thing ever coming down? Nobody really quite knows. So interest rates are at the bottom of the barrel on all fronts. The federal fund rates is about 25 basis points. This time last year, it was 1.75% for comparison. So that is quite a drastic change from this time in 2019. 3% for the 30-year mortgage, about 2.6% for the 15-year. These are record low mortgage rates. We haven't seen rates this low for quite some time. 2018, we're almost at 5% on the 30-year and over 6% in 2006. So what does this mean for interest rates? What does this mean for housing prices and real estate overall? Well, there's really only 3 variables when you think about purchasing a house. You've got the house price, you've got interest rates, and then you have your income. And The buying power is equal to your income plus the interest rates of the house, right? So what's happened here is incomes haven't really gone up drastically, right? But the interest rate has gone down drastically. So what that's done is it has created this artificial kind of like buying power increase, right? So all of a sudden we're able to afford a lot more home than we were before in the past. So we're going to rack up more debt. We're going to keep purchasing houses even as the prices keep going up, because now all of a sudden our payment that we were looking at $2,000 came down to $1,500, and now all of a sudden that house is affordable for us. Other things going on is forbearance. So this is absolutely huge. 2.7 million people are still in forbearance right now. So how in the world is that possible, right? We're supposed to go back to normal. I think the original estimate was like, let's just lock down for 2 weeks or pause of 2 weeks, and it turned into 2 months, and now here we are. And 2.7 million people are still not paying their mortgage. That's about 5% of mortgages across the country. This is equivalent to about $565 billion in unpaid principal, according to the Mortgage Bankers Association. Now, this is absolutely massive, right? If these mortgages all defaulted, 565 billion, somebody would have to take the bill and write the check for that, right? That is absolutely huge. Long-term effects of forbearance is something that nobody's really talking about. Guys, if you realize forbearance hits your credit reports, right? And so lenders are all going to know months or years down the road from now, they're going to know that you were in forbearance. Automatically, that's going to be a ding on your report. Automatically, they're going to realize like, okay, this guy might be a little bit more risky than the other. So how is that going to play out long-term? We still don't really know, right? We're in and heading towards a housing crisis, right? There is pending evictions, there's pending forbearance. And so if you have all these marks on your credit, are you going to be able to get another traditional rental? Are you going to be able to get a home loan again? I mean, the question and the jury is still out on that one. Evictions, so 20 million people as of right now not paying rent, and numbers are kind of all over the place. It's hard to really accurately pinpoint this one, but this is the latest number from the Aspen Institute. So there's about 50 billion in back rent that's owed among these 20 million not paying rent. One of the biggest changes from my last update video is my thought process was operating underneath the real economy. And the transition recently has been towards understanding that we're actually not operating in a real economy environment anymore. We are operating underneath what I'll simply call the fake economy. And the fake economy is introducing a wild card into all markets, not only real estate, but stocks, bonds. The Federal Reserve is adding assets to their balance sheet like never before. They've gone from about 4 trillion when the pandemic began to over 7 trillion. We have issued trillions in stimulus and PPP loans to local governments, to individuals, and to entities as well. $25 billion in rental assistance. That's a drop in the bucket for the 50 that's outstanding, and that's increasing. So the question is, how far are we going to go with this type of stuff, and when are the house of cards going to fall out? Because we are operating under a market right now that is artificially propped up. Government deficits don't seem to matter any longer, and I think for the foreseeable future, this is not going to be a topic or on the forefront of the United States government. We are entering into a time of many think MMT, which otherwise known as modern monetary theory. This is supported by many advisors to President Biden. And the thought process is, if unemployment is high and if there are low GDP numbers, that means that the government spending is not enough. By actually holding back the money supply, we are actually causing the recessionary environment. And the real way to think about it is not government deficits or government budgetary constraints. There is none. The right way to think about it is inflation. You actually you set a target inflation and you kind of like monitor that. You make sure that it doesn't turn into hyperinflation, Venezuela. And that's how you run an efficient economy. So it's a theory, and I think that more and more we're seeing that this may become more of a reality. The target inflation by the Fed is 2% right now, so we'll see if we actually get the 2%, if we're printing trillions till infinity and beyond. Maybe we get to more than 2%. We'll have to wait and see how that all plays out. No rate increases planned for 2021, so interest rate environment is here to stay. Mortgage rates might bounce around a little bit, but I think generally we're going to remain unchanged for 2021. One interesting thing that's been introduced by the Biden administration is a $15,000 one-time tax credit for first-time home buyers. Now, that's a really interesting item here that if actually gets passed and introduced into law, this could be a big changing point for the housing market in the foreseeable future. When Biden took office, he signed a couple executive orders. A couple of those orders impacted the real estate industry. Forbearances were extended till March, as well as the eviction moratorium was extended until March as well of this year. So many don't think that this is enough time. How could it be enough time? We got to get people earned income. We got to get them back to work. And the numbers just really don't support that of where we were before at about 4% unemployment. And we're still sitting at 6, maybe even 10% unemployment. It's a vast difference of where we actually need to be. Step number 2, we're going to take a look at Arizona's market in particular relative to the overall nation. So Arizona is sitting at about 7.5% unemployment. We are quite a bit above the national average in unemployment right now. This excludes, again, not looking right now people, right? So these are folks that, maybe lost hope, right? Maybe are riding the pandemic out and stuff like that. This number is quite high. I would actually tack on 3 to 4% to that number of those individuals who want or need a job, but are maybe nervous to look for one right now. This also excludes full-time to part-time folks. So this is a large number of people. Think retail, think professional services, think any ancillary business to small businesses, think small business in general, right? These are folks that, listen, I had a full-time gig when things were booming and everyone was out and active and buying stuff. And now maybe they only need me a couple hours a day. Maybe I'm only needed part-time, right? So that's a large chunk of individuals as well in Arizona. 100,000 people approximately are currently receiving unemployment benefits in Maricopa County. Now, I found this amazing map that Maricopa put together, which is absolutely fantastic, and it's by zip code. You can see the number of claimants as a percent of the overall labor force, as well as just raw numbers. And there are approximations by zip code, but the data is absolutely phenomenal. So as a real estate investor, I'm looking at this data a little bit different maybe than others might be. I'm looking at areas of the map that were least affected, maybe that are a little bit more resilient. Maybe there's jobs in that environment that are a little bit more resilient, different neighborhoods for various reasons. But this map lays out all of the details that you might need really to understand kind of what's ahead of you, right? So if we're thinking about evictions, if we're thinking about forbearance expiration, or people in financial constraint needing to sell their home to pull out some equity just to get by, these might be some of the neighborhoods that you might be looking for deals. So I'll put a link in the description below to this Maricopa County website, so you can just go ahead and download this PDF document for yourself. Forbearance numbers for Arizona, it's tough to pinpoint this number, but we're anywhere between 3 and 5% of mortgages are currently in forbearance in Arizona. Now, we do rank really high overall relative to the rest of the country. There's some data that I found. This is one of the charts from Bankrate. It's kind of like a conglomerate of data. So what this is showing you is this is showing Arizona at an overall rank of 4. So we're saying we're the top 4 state for outlook as far as a couple different variables go. Tax burden, cost of living, unemployment, job growth, as well as appreciation and past due payments, right? Delinquencies. So we are in a pretty good spot when we're considering those variables. I would say the biggest ones to pay attention to is the unemployment rate. We're 25th out of the 50 states, right? past due rank 11, appreciation rank 2. So this might be bringing up our average overall. Appreciation last year was just off the charts for real estate here, and it's not uncommon to what we saw in 2006 boom as well. Evictions, about 1.1 million rentals in Arizona. Okay, so this is quite a bit. 1.1 million rentals. These are apartment units, these are condos, these are single family homes, etc. About 190,000 of those are currently behind on payment. And about 10% or 100,000 of those are likely to be evicted when the moratorium expires. Meaning that there was surveys ran that asked these individuals, do you think that you're going to be able to catch up on payments or continue payment as usual? And the answer was no. So the expectation for those individuals, about 100,000 in our area, will be likely evicted when come March. However, if the forbearance or the moratorium is extended, I think that the outlook without those individuals getting back into the labor force and without the willingness to get back into the labor force and jobs available for them, it's quite high. Even if we extend it to the end of the year, that it's quite high that we're still in the same boat come December of 2021. Inventory is unbelievably low in Arizona. So 0.66 month supply is what we're looking at right now. It is absolutely incredible. You put a house on the market and it flies off overnight. It is quite an incredible real estate market. Can it go on forever? I think the answer to that is absolutely not. And let's look at some specifics to figure out why. This is months of supply over time. So you can see, hey, about January 2019, we were above 3 months of supply, and wow, look at where we're at right now, right? So quite a big contrast, quite a big difference. And you can see the absorption rate, the percent here. We're just absorbing absolutely anything that comes onto the market. You could literally post a cardboard box online right now in the MLS and it would fly off the market. So let's look at home prices. Phoenix, #1 in the country for appreciation. Our number was absolutely off the charts last year, about 17%. The average price is $300,000 for a home nationally. We have just about caught up to that in the Phoenix area. We're sitting about the same right now. So we have definitely caught up quite a bit over the last several years. The average mortgage in Arizona is just under $200,000. So we're sitting on equity. How long will it remain? That's the question, right? What are housing prices going to do in the future? So if you look at this chart below, what it's showing you is price per square foot and volume, number of transactions that are happening over a period of time. You can see a clear link between the season and the volume, number of transactions that are happening. You have the holiday season where volume is going to go down, and then you have come spring, all of a sudden a bunch of activity in a volume, and then it starts to decline. It gets about 115 outside, and people are like, nah, dude, I don't want to deal with this anymore. And it slowly starts to decline until we go back to the holiday season. We have to consider the vaccine. What is happening with the COVID vaccine here in Maricopa County? Well, Maricopa County has phases for the rollout of the vaccine, and we are currently operating in phase 1A, and 1B is scheduled to begin on February 15th. We're looking at a phase 2, phase 3 rollout where we're actually giving the vaccine to the general population beginning in spring or summer. And I love how they use this spring, summer type thing, right? If I think about how I run project planning, when I do things that are kind of broad like this and vague, it usually means it's because it's actually going to be summer, but I don't want to say that. So I'm going to give you kind of like a range. So let's just go ahead and say phase 2 is going to begin in summer. Phase 3 is going to be probably fall, even winter. I'm thinking that this is going to be a little bit longer summer, fall, when inventory actually starts to pick up relative to folks that are worried about showing their house during the pandemic. Migration patterns, what is going on with people? One interesting thing about 2020 and what it taught us was a lot of jobs moved remote. A lot of folks left the office. A lot of folks realized I can live wherever I want. I can decrease my living expenses. I can buy a house rather than renting at $5,000 a month. A lot of folks were moving around in 2020. So what I've done here is I went to a couple resources, United Van Lines and UHaul and a couple others, and looked at the migration patterns of where people are going. This is a great indicator to figure out if we're in a great real estate hotspot or if we're in a horrible declining real estate market. So according to UHaul, Arizona ranked number 5 in the most desirable states to move to. Arizona ranked 20 in this same study last year. So let's go ahead and take a look at a couple others. This is North American Moving Services. In their study, North American Moving Services, they actually found that Arizona ranked number 2 in the country. And all these studies are somewhat different, right? With the order and rank. Migration patterns for United Van Lines. I loved their interactive map here. So go ahead and check them out in the link below. This is really cool. They actually break out the reason. So when you're renting from them, I guess they ask you these questions. It's absolutely incredible. Why are you renting a truck and driving to Arizona, right? Well, it's for family, it's for lifestyle, it's for retirement. Look at that retirement number, guys. 37% of people said that they're moving to Arizona because they're retiring, right? It makes total sense. We totally get that. Health reasons, 8%. We're at family, 21. Step number 3, forecast. What does all of this mean for Arizona? What does this mean for our local real estate market here? I bet you guys are dying to know what I think. Well, the forecast side. There is one commonality here, and it is welcome to the burbs. What is happening right now with migration is folks are leaving the inner city and they are preferring to own their own home. They love the suburbs. It is in right now, right? The data is out. That is what's happening. That is what's going on. So any suburban area, Phoenix is set up fantastic for that. We have over 500 square miles of suburban real estate. It is a perfect environment. It is warm climate. People love that, especially in the wintertime. If I'm gonna pick a place to move, I'm probably gonna move to a warm climate. Bless their souls when August comes around. Demand is going to continue to increase in 2021. The reason being is we have such an influx of people, guys. It is absolutely mind-blowing how many people are moving to Phoenix. A couple things to consider. 2021, if we end up getting a $15,000 tax credit for first-time home buyers, guys, this is going to change the game. This is going to change the game in real estate. In Phoenix, this is going to change the game in real estate all over the country. Namely, in places where affordable housing still exists. Now, listen, this is one caveat. We're going to talk about this later. The affordable housing crisis that we're moving into, this is very, very real with the housing prices where they are right now. Right, that $15,000 first-time home buyer may actually be everything somebody would have to put down on a home, right? So what does that actually get you? Well, you can get a lot of properties out here in Phoenix right now, but will you be able to in 2021? I think the prices will adjust a little bit to support more of that. So I think this is going to be a great place for people to move and buy their first home. FHA loan limits are also proposed to be increasing as well, so that's going to open the door for a lot of folks as well. More millennials. We've got a ton of millennials buying their first home. And look, it makes sense. I'm paying $4,000 in rent to live in New York, to live in San Jose, to live in all of these different areas where I might not be attracted to that anymore. We've got companies that are promoting, that actually giving folks money to move away from city centers. It's absolutely incredible, but it's happening all over the country, guys. So we have to pay attention to this. What do millennials want? What are they looking for in homes? Well, I can tell you firsthand, we want turnkey properties that are renovated, that are stylish, that are ready to go. Those houses are flying off the shelf like crazy. They're coming in 120% over listing price. It's absolutely incredible. The demand is there for that home, and there's a lot of opportunity in the Phoenix market to provide and to deliver those housing units to the millennial generation. Inventory is going to increase in Q3. I think we'll actually see the beginning of inventory start to peak up in early spring, but not really take off until Q3, Q4. I think Q3 is when we're going to actually see a noticeable difference of inventory. With the vaccine rollout, with the seasonal adjustment of people coming out of the holidays and ready to move around, this is going to happen. I think some other caveats to consider here is I think we've got a lot of landlords rethinking life, right? I mean, geez, my hand has been held back by the government to collect rent for tenants, right? And do I want to be in this environment long term? Do I think that this is sustainable? Do I even want to deal with this anymore? I didn't really even like managing the property in the first place. Let me just go ahead and sell that property and move on with my life. I think we've got a lot of folks considering that as well right now. Also, I didn't put on this slide, but Airbnb, absolutely massive. Travel industry is crushed right now. People aren't traveling as much as they did before. Airbnb owners, I think, are getting a little bit uncertain if they want to continue this model. Financial strain continues. I think that what is going to happen in the real estate market is we've got a lot of folks that are still unemployed. We've got a lot of people that are still out of the labor force and maybe not interested or worried or scared to go back into the labor force, right? And this financial strain is going to continue. We're going to see more and more folks that go delinquent or enter in forbearance. I don't think that that's over for us. I think 2021 is going to show us a little bit more numbers. Seasonal activity, we have to consider what's happening, where we're at, right? Spring is coming. Also, we have to think about fall is coming, right? So if prior pandemics have taught us anything, the Spanish flu, one of the biggest waves that came with the Spanish flu was the year following in fall of the initial outbreak of that disease. So we should be considering what's going to happen around the fall time of this year as well. Rents to continue increasing. So the whole move to the burbs, guys, this is really, really real. What's happening in the suburbs? Put a chart here below by CoStar. This is fantastic data here, showing you rental rates, where they're down, where they're up. I think the colors don't make quite that much sense here. The blue is actually down. I would have put that red, but anyways, you've got Los Angeles down 5-6%, right? You've got Washington down 9%. You've got Chicago down 10%, San Jose 13%. These are rental rates, guys. People aren't getting the rent that they were asking before in these mega epicenters. The suburb numbers are in and they are hot, guys. Look at this. We've got New Fork, Sacramento up 4%, Inland Empire up 5.3%. It's crazy. Phoenix up 3% in rental rates. So guys, this is only going to continue. We've got migration into these places. We've got more demand. I think the demand is going to continue to be strong, if not increase a little bit in 2021. So these numbers are only going to go up more. I think the outlook, me as an investor, I'm looking at, actually this house is all white behind me because we're about to move out of this and turn this one into a rental. We're going to take advantage of some of that. This single family 3-2 home right here. So I think we're going to collect some rents on it. We'll see what the housing prices do for a while. This is going to be a great cash flowing environment. So if you guys are in a similar situation, I think rental is a great place to be right now. Namely around that $1,500 to $2,500 range is a great spot right now. Location is still the name of the game, guys. So regardless of where you're looking in the Phoenix area, I think a couple things to consider. If we're making any investments in here or just buying a home in general, maybe you're not an investor, right? We're thinking about the areas that are going to be hottest for appreciation. So a couple of things that I'm thinking about right now is you've got the typical hotspots, right? You've got Northern Phoenix, Deer Valley, you've got Scottsdale, you've got Paradise Valley, you've got Desert Ridge, you have all of these Central Phoenix, you have all these hot little neighborhoods and stuff like that. And these neighborhoods are going to continue to be robust and they're going to deliver because they're attracting that millennial crowd again, right? Those are the folks that are in demand right now. They're looking for housing, they're getting their first home, they're entering the market, right? Location is going to be critical and always will be critical. Some specifics, we've got Taiwan Semiconductor Manufacturing Company. They're coming in. They've already purchased the land, 80 some million. They're building a multi-billion-dollar factory. This I put this on the map up here. This is the land that they actually purchased, the area. About 2,000 jobs are expected to come to this manufacturing plant, which is fantastic. Just think about where people are going, where people might be living. Those areas are very interesting to me right now. We've had two big name San Jose offices or companies announce that they're moving their headquarters to Arizona. Via V Solutions and Align, these are the two companies that I've heard of so far that have moving their headquarters. So let's find out where they're going, find out where they're going to be. This is going to be a great opportunity for us, adding great quality jobs to the area. Increased in distressed properties. For all of you real estate investors out there, I have some really good news for you. Wait, the deals are still coming. They are still coming. The deals are still coming. Increase in distressed properties. We're going to see this, guys. It's going to hit the market. It's only a matter of time before those are coming. So a couple things that I want you to pay attention to. We have a continued housing market stress, right? This is folks in forbearance, 2.7 million. I want to make a clear distinction between forbearances and delinquencies. They are two very different things, right? So a mortgage that is in forbearance is not delinquent, but a mortgage that is in delinquency is not in forbearance, right? What do those two things mean? Well, these are both happening simultaneously. And this is a chart that I threw in here. This is mortgages that are currently in delinquency 90 plus days. That is the rate at which you can start filing eviction paperwork. So these guys are at risk of eviction. And this chart here is showing you Phoenix relative to the United States. The United States is the light, thin blue line here. And we can see these numbers are quite low, right? So this is relative to the last downturn in 2010. Look at that spike. It's crazy. It's a crazy spike. We're over 8% delinquency, right? Why are we not right there right now? Wow, that's the fake economy, guys. What has changed the game this economic downturn is that we have forbearances. So any secondary mortgage, any mortgage that's on the secondary market can enter into a forbearance period legally by the government. The servicers have to abide by that. I can be in that and not be considered delinquent. However, if we were looking at apples to apples here and I actually was delinquent and not forbearant, you would see this spike being almost that 8% number. So it's something to consider, guys. What happens when the tables turn? That number could spike very quickly. There are 24% of mortgages that do not qualify for forbearance for whatever reason. Maybe they're a portfolio loan, maybe they're a private loan, whatever. This is a great data point to track. I'll go ahead and post the link of this chart and this information in the description below. The search for affordability continues. This is going to be not only at a national level, but in Arizona, particularly where the household income is on average about $60,000 a year, less than the national average. This is going to be a big deal, guys. If I'm focusing on any properties right now, I'm looking at starter homes. So this is a great place to enter into. Millennials as a targeted demographic. So turnkey rehab properties that are stylish are absolutely flying off the market right now. In fact, if we looked at Arizona regional MLS data, the time on market or the inventory for the starter home right now between 200 and 350,000 is almost 0.4 of a month's supply. It's absolutely incredible. It's the hottest area right now for the first time home buyer to get into. That's what's flying off the shelf. If I'm focusing on anything right now, I'm looking in that demographic. Also, I'm looking at mobile home parks. It's a really interesting opportunity for us. Mobile home parks have been doing phenomenal for years and years, and I think that they have a lot of room to run. Tiny home communities. This is something that's new to me, new to the Phoenix area. I'm very interested in getting involved here and learning a little bit more. I think this is going to be a great opportunity for housing in the future. Now, we can't ignore the elephant in the room that over 30% of people migrating to Phoenix move here due to retirement or because of retirement, right? The baby boomer generation is massive. Long-term care facilities continue to be a fantastic strategy for folks, and especially at a time when market prices are slightly high and interest rates are low, because your real estate purchase actually becomes a business. As long as you can make that a cash flowing producing business, you could end up with a lot of debt, which is actually going to be a good thing come the inflationary environment, because you're paying back that debt with dollars that are worth less in the future, right? So it's almost a hedge against inflation. I think long-term care facilities is a fantastic business strategy. That's it, guys. Thank you so much for watching. I really appreciate it. If you got any value out of this video, please hit the like button below. It helps share this video with others that are looking for content like this. I really appreciate it. It takes a tremendous amount of effort to put together videos like this. So thank you so much for hitting the like button. And also make sure to subscribe and hit the notification bell if you want more videos and content like this. Thank you so much for watching, guys, and until next time.